Welcome to Charts Today. My name is David Linton, and today's edition for Friday, the 14th of October, comes to you from Melbourne in Australia. And I'm sorry that there hasn't been many charts today this week. I was at the conference speaking on Friday last week, and unfortunately, I've got COVID this week, and this is the first day where I've really had a voice without coughing. So I'm sorry for the many listeners who listen out for charts today, but I've not really been well enough to do it. Anyway, I'm on the mend. It's just been a bit of a pain that I haven't been able to see family and friends as planned. Um, so, looking at the big story in the UK at the moment, of course, is government bonds. Here we see how the Bank of England intervenes on the bond price, which then makes the yield fall. So, by buying bonds, the yields then fall, the bond rises, the yield falls. And we're just seeing this game that they're playing back and forth. So, of course, they are fighting a market that is rising globally. But it'll be interesting to watch this chart as the bank have said they're going to stop supporting bonds. So, no big surprises if we go higher. Looking at the dollar, remembering this is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. The dollar still bullish, of course, on the medium and long-term charts. Just short-term after those inflation numbers came out in the US yesterday, we've just fallen back, but we are still do have these big upside targets for the dollar. So it's just a temporary blip at the moment. The euro is sitting at 97.50, and of course the medium and long term trends are there bearish, but just back above short term there. Sterling, all eyes on sterling. Will the government pull a U-turn in the UK? That's really the news at the moment. Sterling rising at the moment, nonetheless. The market is effectively pricing in that U-turn. And if we look at sterling against the euro, we're sitting at 115.60 again, pricing in a U-turn there. So quite interesting to see that. The market is winning, basically. Looking at Bitcoin, we are sitting below $20,000 still. And looking at US markets, we are still really in bear trends here on the weekly and on the daily on the Nasdaq. Looking at the S&P future, we're down 0.2%. So markets relatively flat. We see the weekly candle here, not much action. Yesterday we saw a little bit of recovery, but the reality is the trends are very much down here. Looking at the FTSE future, we're up 1% this morning in the UK. Again, that reversal being priced in by markets for the government reversal. A U-turn effectively has been priced in. The DAX coming back to test this 12,500 level from below. What was support is now resistance. Trend is very clearly down here as well. Asian markets, we saw Japan actually bounce. It was up 2.5%. We saw quite strong showings, actually. China up nearly 2%, not enough to change the trend, of course. India was up 1.6%. Can't break the 60,000 level and activate this new upside target, some 40% higher. The Aussie market was up 1.75%. So that's closed today, stronger, but again, we are wandering below the cloud here as well. Looking better than most markets, but still not looking great. We'll look at the energy mix in a minute. Seeing some of the commodities, wheat, little changed. Building a base here for a new trend on wheat, so that's quite interesting. Gold sitting at 1660. Failing to get back above that 1770 level, and silver sitting now back below $19. So that blip we saw last week was exactly that, just a blip. The trend is still short-term down over the last 5 days or so. So we are coming back to test. But will we make a higher low before going to a higher high? This is potentially the beginning of a trend change. We have to watch that. Taking a look at the US 10-year yield, just sitting below 4%. Still really nudging that new highs. Italian bond yields are making new highs. This is a global thing we are seeing. We're just waiting to activate that big upside target to a very big number there on your chart, so keep an eye on that. Apple, all eyes on Apple really. This is the big one. If we fall below the June low at 130, the world's biggest stock starts to become, well, save Aramco, but the biggest stock in the US, we start to see that really potentially unwinding the market. Looking at the energy mix, we were bearish on gas and Nordic power this morning, but we're seeing Brent crude just pulling back. That 95 level was the level that we identified needs to break. We do have a new upside target there, which has given us a bit of hope for a recovery there. Just waiting for this trend really to break. WTI, similar position, of course. US nat gas, we were neutral. It was a bit of a hard call. We had targets in both directions, and we are just back above the cloud, but we do have just mixed targets. We really are filtering between this 657 level and waiting for a break as to which way we go. Emissions looking okay, provided we hold that 64, 65 level and increasingly 65, but we just can't break above the 70s. So again, we were neutral there. Gas prices, though, we were bearish today. TTF's down 2.5%. That trend is really becoming clearly down. Look at all those downside targets on 1-minute charts. You cannot ignore these charts. Watch those on your screens. And looking at the nat gas price in the UK, NBP, again, we've got downside targets there as well. So really quite key. And again, we were bearish there today. German power, 420 is the level. We're sitting at 421. We break below that 420 level. It is looking pretty bearish. And of course, we've given a power report out to clients as well. That's it for today. All eyes on what happens with the bond market in the UK and sterling, of course, for UK investors. But all in all, we're seeing a little bit of respite for markets, but that doesn't change the fact that the trends are clearly lower for equities and bonds. That's it for today. Until Monday, hopefully I'll be in a better place and I'll be in Sydney. Until then, happy charting. Bye for now.